Natural gas prices are starting to tail off after a really strong start to the year. Is the buying pressure done for now, and will the bears take over? My name is Connor, the senior market analyst at the global brokerage firm Zenfinex. I provide video analysis on various different trending markets on most trading days, and today's video will cover a monthly forecast on the natural gas market, including a fundamental and technical analysis. Okay, so in the natural gas market, there's been this real, I think, battle between geopolitical tensions, which really have been elevating the price recently, and also warmer weather expectations, which is causing the price to, I think, kind of yo-yo, which we'll see on the chart in a minute. Now, Russia, which is Europe's biggest gas supplier, have apparently curbed flows to the continent via a route which is obviously crossing Ukraine on Tuesday, and that was according to data from the grid operator Eustream. This will limit supply, of course, and obviously keep prices elevated if that was the isolated factor. However, there are other factors working against this as well. Now, the French president has said that he's received assurances from Vladimir Putin that Moscow wouldn't further escalate tensions over Ukraine. Some people believe that, some people don't. Either way, those sorts of comments are easing geopolitical tensions. However, it must be said, and this is really important, that this should be continued to be monitored throughout the next month or so, because as the tensions are really, they're still bubbling on the surface still, and they could explode at any time. And so we're not really sure. I can't really give a prediction on where I think it's going. I think it's unlikely that Russia will invade Ukraine, but the threats do seem to be quite serious anyway. Now, let's talk about Nord Stream 2, which has been in the news recently. And for those who are not aware, this is Nord Stream 2 is a 745-mile pipeline stretching from western Russia's border with Estonia and northeastern Germany. Now, it was created in 2015, but when it's actually up and running, it would boost deliveries of gas directly from Russia to Germany. In fact, it could actually deliver 55 billion cubic meters of gas per year, which is quite a lot. However, Biden has said that if Russia do invade Ukraine, Nord Stream 2 will not open. So this is, again, something else to monitor in the next few weeks. A lot of things that are kind of seeming on the surface, really. Now, when you actually look at weather factors, of course, with natural gas is really important. Although we're still in the winter months, over the next few weeks, temperatures are predicted to be unseasonably mild. This is obviously going to cloud the demand outlook, which has been boosted recently for natural gas during February. As we move further into the year, of course, buying natural gas now becomes, especially at these higher prices, becomes increasingly difficult due to a natural shift in temperatures. Now, when you actually combine all these factors together, I think natural gas prices are becoming increasingly bearish, in my opinion. With warmer temperatures on the way and the chances of Russia actually invading Ukraine, I think, being quite slim. I think the bears could be in pole position throughout the next month. But let's take a look at the chart and mark those key levels anyway. On the daily chart for natural gas prices at the moment, I'll add in our moving averages, and you can see our relative strength index as well, which is pointing now a bit further to the downside. Something I found quite significant really is, of course, this drop that we had in November, and I think it's really set the tone for where these prices could be heading. On top of that, we have this moving average, which is now crossing over and below the 50, crossing the 100 and the 200-day moving average, which again is another bearish sign. What I found most significant about the market structure we see at the moment is we actually had this area here, this last kind of bearish order block zone, a bullish order block zone, which broke really key structures to the upside when we saw that huge surge. We actually failed to respect these order blocks, and actually a form of mitigation this is now. And as you can see, from this huge drop we had, yes, we had this rally at the beginning of the year, but if you actually look at where the price has gone to, it's only really respected this order block we have here. And I mark that in there for you now so you can actually see. So this was the last piece of buying pressure we had before we had this quite nice run to the downside. And since then we've just kind of been looking to test that order block again. So if you did manage to find this order block, for anyone who trades with order blocks, I'd highly recommend it. It's what I do all the time, as you may well know. This is a really nice selling opportunity, and I actually see natural gas prices failing to hold kind of this area of support that we have here, and I'm actually expecting prices to break through this order block that we have here. So at the moment, the bull case is that price runs into this order block, and you can see we had this break of structure to the upside. So you can see that this would be potentially a good level to buy from if you're bullish on natural gas. You'd have your stop loss maybe just sitting below, and you'd probably want to aim for the equal highs that we have up here at around 5.3. That's around a 5 risk reward ratio trade, which actually is quite a nice trade. Alternatively, and what I think may happen because of the way that I think the sentiment is shifting, is you actually get a break below this order block level, which actually makes this a mitigation zone. When this breaks below and we have this mitigation zone, I'll be looking for a retest and then a sell down, and I think we could be heading to create a new low down at something like 3. It's going to be my prediction for the next few weeks or so, if we do obviously get those easing political tensions, and we also get warmer temperatures, because obviously that can be quite unpredictable as well. But if you were to sell, you could either wait for this mitigation area, and then you could go into something like the 1 hour. That's around a 2 risk reward trade for that. Just looking on the 1 hour now, just see if I can spot anything clearer. But I think really that's what we're going to be looking for. We're going to be looking for that run down into this, create a new low, and then a retest of this mitigation area, and then a move down towards 3, which is going to be my take profit level for the next few weeks. So really critical level coming up at the moment, and it's going to be how it reacts in this area here. As it stands at the moment, it's an order block level, and we could look to buy from this level. If it breaks through, then this becomes a mitigation area, and we could look to sell from that area as well. Let's see how this level holds over the next few weeks. Maybe once we're in this level, if we get a nice clean break of structure to the upside, then I'll post in our Discord channel a potential opportunity to buy from. So if you haven't, if you're not in our Discord channel and you're watching this video, feel free to get in touch, and I can add you to that as well. But other than that, that's my prediction for natural gas. Make sure you've got your notifications turned on. As always, guys, it does help boost our channel. Any subscriptions, any likes, comments, where you think natural gas is going. I think we're in quite a critical stage at the moment, where we're balancing between those geopolitical tensions and obviously the warmer weather expectations coming in. Over the next few weeks, it's going to be really critical to see how this plays out, how this level here holds out on the daily chart. But yeah, other than that, I hope everyone has a great trading day. Let me know what you think in the comments on where you think natural gas is going. And yeah, have a great weekend, everyone. Take care.